Watch, people are gonna pop up. Hey everybody, good afternoon. As usual, give me a few minutes so I can let everybody know we're on. Let me let Instagram know that we are on. Oh, happy Cinco de Mayo, everybody. That part.
I didn't even celebrate
Oh,
today. I was in the house doing
yeah.
work. I didn't even get out like I used to.
Oh, yeah. That I don't. I'm new to the West Coast, and Cinco de Mayo isn't really celebrated, so I didn't know how to celebrate. So I bought a
Mhm.
bunch of tacos and mock margaritas and nachos. I don't know was I supposed to do that or not. But do they have parades or something?
Uh,
What are you usually supposed to do?
On the West Coast, I don't know. Usually, what I used to do, I would just go to the bar with the homies and drink. That's it.
Mm,
But I don't really
mm,
do that much anymore. So I don't know what.
mm.
I mean, I'm sure there's festivals and parades and whatnot. I just never have. It's been a while. Put it like that. It's been a while.
Okay. So, as you can see, there's a new way of posting on Facebook. It's weird because Facebook stopped allowing um lives for some reason, so I had
What?
to do it in a special way. So bear with me.
You can't go live
I
on
think
Facebook?
it's you can, but it has oh, it does show we're live. Where is it showing? Oh, that's my personal page. You can, but they're not letting it happen on groups anymore through third parties unless you take a certain take certain steps, which I've done already. I know what to do. I already watched the video on it, but I think it's because I recently changed my password. It's a long, it's a long thing. Things are different, but actually, no, I can do it on YouTube. They'll let you share, obviously, on YouTube, so I'll do that,
Okay.
which is fine. But this just gives me time anyway to let people in, and then usually our moderator. I wonder who our moderator is. Because it's like, our moderator is always on point with this. Okay, so yeah, I got the copy. Let me put in our group. All right, there, and then what's the other group? All right, is anybody on now? I guess it's up. There's two people on. So, hey, you guys, welcome. Happy Cinco de Mayo. As usual, I'm on here. Me and Sean are on here, and just letting everybody know we're on. And okay, so the one more group I'm gonna put us on, then we could just go live. And when we start, I'll just slowly but surely put it in all the groups. Let me do the one last group here. Mm-mm-mm. Okay. All right. Okay, so let me introduce us. All right. Hey, you guys. This is Tamaya Robles. I'm here with Sean Rogers. We are doing our weekly segment, Ask a Mortgage Officer with Sean Rogers. I am a credit repair specialist, expert. I am the host of my podcast, Coast to Coast Credit. My company name is Fix My Credit Now, 850.com. And anything ever pertaining to credit, I will be here for. But for the most part, this is Sean. Please feel free to leave any comments, anything you want to say. Feel free to join the conversation. Okay, Sean, I'm gonna turn it over to you.
Awesome. Thank you, T. Once again, my name is Sean Rogers. I'm a mortgage broker based out of Houston, Texas, and doing this for about 20 years. And I specialize in, of course, first time home buyers and, well, anything generally dealing with financing, buying a home. So Today, I want to talk a little bit about the steps of home ownership, how to start. A lot of comments that I get from customers or people that I talk to in the streets or wherever I'm out and about, they don't know where to start, right? They don't know where to start. They think there's so many barriers to entry as to why they can't buy a house. And I've heard every excuse under the sun why I can't buy. And some are valid. I'm not going to lie. I'm not downplaying people's struggles or what their situations might be, right? But those barriers to entry can be knocked down, through time. A little work, a little grit, determination, they can be overcome. Now, so what I'll discuss is a few things that I see, I would say on a daily basis, people come to me with, and how to get past them. The top three things we look at is credit, income, and assets. So let's start with the first one, credit. Okay. Now let's this should be a well-known fact at this point, right? You don't need to have a 700, 680, 740 credit score to buy a home. You don't need that, right? I think at this point, everybody should know that, yes, you can buy a home when your score is below 580, 550, down to 500, sometimes below that, depending upon circumstance, okay? Will you get the best pricing, the best rates when your scores are lower like that? No, you won't, right? But you will own a home, okay? Depends upon if that's going to be affordable for you or not, right? So once again, when it comes to interest rates, yes, they're higher right now. And we use what we call risk-based pricing. So if you are deemed to be a credit risk based upon your past payment history and your credit usage, utilization, charge-off collections, bankruptcies, whatever, your scores are lower, right? The rates are affected by that. So if you do want to qualify for the most, yes, you do want to have a cleaner credit profile. Now, once again, when you step below the 600 mark, then you start getting into situations where you got to have your own money for down payment. Now, I do have programs that can go down to a 580 credit score that give you down payment assistance. That is a thing. It does exist. It can be more expensive, down payment assistance, right? But it is possible to achieve. So no, you don't need to have a 640, 620, 600 credit score to achieve down payment assistance. It is available if you have at least a 580. I do not have any programs that offer assistance once we slip below the 580 mark. Now, when it comes to credit, what do we look at, guys? What do we look at on our credit report, or what do loan officers look at when we're looking at your credit reports when you call us for an approval or to see where you stand, right? Generally, we are looking at the last 12 months of mainly your credit life, your payment history. So in the past 12 months, what's happened to you? What have you done? Right? If let's say you're sitting at a 600 credit score, there's a reason why it's at 600. So a loan officer's job is to look at the credit report and determine what has happened to you over the past 12, sometimes 36 months, generally 24 months. Okay. So for example, one thing that we don't want to see in the past 12 months are any late payments on any accounts, right? I don't want to see any credit card payment lates, car payment lates. I don't want to see installment loan payment lates. I don't want to see any new collections, new charge-offs, right? We don't want to see any of those items, okay? Now, if you have an older credit history and you have a late payment here or there, but your credit profile is relatively clean outside of that, and maybe let's just say you have a lower debt-to-income ratio, they may overlook those late payments in the past 12 months. So don't assume that just because I had some lates, I'm going to be disqualified automatically, right? That is not up to me to determine that up front, right? I'll give you a suggestion based upon the factors that may see in the file and then take it from there. All right, but generally, if you're planning to buy a house in the next year, from this point on, you want to make sure you pay all your bills on time. Tamaya, the biggest killer of mortgages or approvals that I see is, I would say, late credit card payments on small accounts. Like people have small little Macy's cards, or they may have a Walmart store card. These small little store credit cards we don't really use or pay attention to on a monthly basis. And when we use them, we pay them off, and they sit in the bottom of our wallets or our purses until that annual fee pops up, right? And you're wondering, well, how did I get a late payment? Well, they put the fee on your bill and you weren't set up on any kind of auto pay, right? Now you got a late payment. And it's hard to get those things off of the credit report. So I would also say this if possible. Some of us are against this too, but I would say, hey, listen. If you can put some of these small cards or accounts on auto pay, just make sure that there are no lates that's going to occur that you can prevent. That'll save you a mortgage. Okay. Because once again, I had to decline a lot of people because of those late payments they've gotten, right? Could have been avoided, but because we forgot about the card, we got a late, now we're screwed, right? So if you're looking to buy a home in the next 12 months, you want to start now. You don't want to wait until your lease is up.
Yeah.
3 or 4 months on, right? Because it may take me 6 months or 9 months to get you right? Now, also when it comes to credit, remember, having no credit can be just as bad as having bad credit. Okay, having no credit can be easily rectified. It's not hard to fix that. Okay, and Tamaya will show you how to do that. But no credit can be just as bad. So just because you don't have any bills to pay, we really can't trust you with $300,000 or $500,000 if you can't pay a regular credit card bill because you don't trust yourself or whatever the case may be, right? Now, if you do have no credit, there are ways around that, but it's not as good as a situation. Now, the second thing is income. So remember, guys, I talked about this a couple of weeks ago about income and especially the dual income households. Okay, now in most major metro areas, right, most city center areas, trying to buy a home on today's market with today's interest rates, and you have an individual household income is going to be somewhat difficult. I did not say impossible. It'll be difficult. It's much easier as two people can go in on a house together. Now, I'm not saying you need to go out and get married, get you a boyfriend, get you a girlfriend or a partner, or whatever the case may be. I'm not saying all that, right? All I'm saying is that two incomes on an application and two heads on an application look better than one head. Let me give you an example. Let's say once again we have someone that works. I don't know. Let's use McDonald's again for an example. Okay, somebody works in McDonald's and they're paying it as a manager, making $20 an hour at McDonald's. I don't know if they pay there. I'm just making a statement. Okay, so if they work 40 hours a week, they make about $3,500 a month gross. That's what we qualify you on. It's the gross income, right? Now, if somebody makes $3,400 a month, okay, the max mortgage payment I can qualify them for will be about $1,600, okay? And where I'm at in Texas, that's going to get you a purchase price of probably $130,000, $140,000 maybe, including property tax and insurances. Not much, right? But let's say two of you guys are working at McDonald's, right? And you both are shift managers or whatever the case. So you both are making $20 an hour. Okay, so now my monthly gross goes up to about $6,900 a month. Okay, now barring any debt they may have outside of this, their max payment amount goes up to $3,200. That takes them from about $150 to about $350, maybe $400,000. So, and also, if let's say two people, and once again, I'm not saying that these people are married or related or any shape, form, or fashion. When doing the credit underwrite, or I would say the automated underwrite, it reads less risk if it's two heads as opposed to one head. Okay? Two heads are better than one when it comes to credit risk. It reads it differently. It reads it better. Excuse me. I would say that if you have a person that has borderline credit or two folks that have borderline credit, right, that has a stronger chance of it getting approved as of just the one borderline credit. Even if they both have high debt to income ratios, having two heads on the mortgage is better than one. It kind of, I guess you could say, it spreads out the liability a little bit, right? Chance for repayment is better than two as opposed to one. So what we want to do, we want to make sure, if possible, right, if we want to buy that larger house, or if we want to you know, get a home that's decent for the family. We have larger families. Trying to qualify off one income, personally, I think is a thing of the past. That's something that was for the teen, the 2000s, 2010s, the 90s, right?
Mhm.
2020s,
Mhm.
it's just not going to cut it anymore. And I think that the quick, and once again, this is not in all areas, right? I'm speaking for major metro areas based upon
Mhm.
average incomes of certain age groups. This is not everybody's. This is not a one size fits all situation, but this is a majority of people that I deal with on a daily basis. Like, hey, look, excuse me, if we combine heads, like, and it could be you and a friend, you and a buddy, a mother and a daughter, father and a son, right? Uh,
Mhm.
if we combine heads, we have more income, more house to play with, better house, better neighborhood, better schools, right? As opposed to us trying to do it by ourselves and end up settling for something that we don't really want to settle for. Once again, granted, I know that not everybody has the ability to have somebody along with them. I get it. But if it is an option, I suggest use it as out, right? Does that make sense to you?
Yeah.
Yeah. Okay. Okay. Also, the second thing I see when it comes to income, um, quick fact: you don't have to be on your job for 2 years to qualify for a home. Not necessary. Okay. What I need to see is 2 years of you being in the American workforce. I need to see that. Okay. So, for
Mhm.
example, let's say um, let's say I'm a 21-year-old guy. And while I was in high school, okay, I worked in McDonald's since my junior year. So my junior year and my senior year, I worked in McDonald's. Then I went to college, okay, and then or I went to wherever, um, and then I found a job. Right now, if there was a gap from when I found this new job and the gap between my old job and new job was more than 6 months wide, I need to be on that new job for
Mhm.
6 months before I can qualify for an FHA mortgage, right? But if
Mhm.
I got a job, let's say I was at McDonald's and then I got an offer from Burger King, right? The next day, Burger King said, "Hey, listen, we're gonna pay you. You're getting paid $20 an hour at McDonald's, but I'm gonna pay you $30 an hour at Burger King. So I'm gonna go to Burger King and get $30 an hour, right? Now
Mhm.
I can use that
Mhm.
income immediately if I'm just switching jobs. I don't need to be at that job for 6 or 7 months, right? I'll need an offer letter, probably a pay stub to verify the hours and a verification of employment, and then boom, I'm using the higher income. I'm qualifying for more of a purchase price. So people think
Mhm.
that what I get a lot is that they think that they need to be, um, at the job for 2 years, at that job for 2 years. It's not the case. You don't need to be at that job for 2 years, right? Now, on the flip side, though, that's only for hourly wage, right? So if I let's say I had a job, let's just use for example a truck driver. Let's say I was a truck driver and I drove trucks for a living, right? Now, let's say I
Mhm.
worked as a truck driver and I was with one of those. I was fresh out of truck driving school and I just got my CDLs, right? And let's say I work for a mega carrier like JB Hunt. They're a big trucking company, right? Now, usually, if I'm not mistaken, I'm not a driver, so I don't know this, but this is kind of what I believe. I think they pay their drivers by the mile, right?
Mm.
They pay by the mile.
Okay.
So if that's the case, if they don't pay me hourly and I get paid by the mile, I'm going to view that as what we call variable income, right? Variable income.
Mhm.
Now,
Mhm.
based upon FHA and conventional guidelines, if somebody receives variable income, which means that hours or amount of pay, rate of pay can fluctuate, they got to use averages. They can't create averages until you've been in that job for an entire calendar year, 12 months. Okay. So if somebody gets a job as a truck driver and they're paid a type of wage or rate of pay outside of hourly or salary. Okay. I need them to be at that job for a calendar year before I can accurately calculate their actual income. Okay. However, I went to work for a, a local company and I didn't drive for a mega carrier, or I work for FedEx, we'll say, and they let's say they get paid by the hour. Okay. Then I can effectively use an hourly base, but I wouldn't be able to use any overtime. So our guys that get overtime, so let's say for an example, excuse me, let's say for an example that I just got a job at FedEx and they said, hey, listen, come work for FedEx. Instead of Burger King, we'll pay you $31 an hour, but we'll give you a ton of overtime. So I'm like, oh, I could work so much overtime, make so much more money, work an extra 10, 15 hours a week on overtime and just kill it out here, right? Okay, cool, you can, right? But I couldn't use that income because when I was at Burger King, I didn't work any overtime. I would just work my 40 hours a week. I can't average anything. So anything that goes over your 40 hours a week guaranteed, right? I got to have a record of you getting that. That also is what they call variable income. Okay. I got to show a record of you getting that money. So if you tell me like, hey, I just started a job about 2 months ago, I'm getting mad overtime. I'm working an extra 20 hours a week. Look how much money I'm making. On most, not all, most of my programs that I have, I need to be able to average that income out. Okay, by seeing a previous track record of that income. So once again, I didn't work any overtime at Burger King and McDonald's, right? But I'm working overtime now at FedEx, right? I won't be able to use an income until probably another calendar year, right? Okay. So we have to be careful of what we want to think we can qualify for because of how we received our income when we got our income. Now let's look at another example when it comes to income and barriers. Our self-employed crew, our guys that are self-employed, okay? This is a real thinger for me, but a lot of us that are self-employed, we don't show a lot of income on our tax returns. It's the American way, right? That's what it's for. We have write-offs, right? If you tell Uncle Sam you made $25 last year, right? Or you lost money last year, right? Then you're telling me you made $25 last year. So I'm going to use $25 to qualify you. If I look at your Schedule C or your 1120S and I'm seeing loss, right? That's what I'm going to qualify you on. Negative $2,000 a year. So you don't qualify. You have no income, effective income, right? Now, you have to pay to play. So if you want to get a standard FHA, VA, USDA, conventional standard mortgage, right? You got to tell Uncle Sam you made enough money to qualify for the mortgage and the corresponding debts to go along with your credit life, car payments, installment loans, credit cards, whatever, right? Then you got to pay taxes on that money, right? So let's say, Tamaya, you made $100,000 last year from your job. Okay. Or from your self-employment. Effectively, you're at a 30% tax rate. And I say, like, to qualify for this house, right? I need you to show you gotta make at least $70,000 a year, right? So effectively, if you show that, you may have a tax liability. I'm not an accountant, so right? You may have a tax liability of, we'll say, $20,000 or so, $15,000, whatever. Right? So you've told Uncle Sam you made 70 grand and now you owe Uncle Sam 15, 20 grand. So you can qualify for a low interest rate and put the minimal amount down. Or hear me out, you can take your write-offs, right? Take a non-qualified mortgage loan, an NQM loan, using bank statements to qualify, a profit and loss statement to qualify, balance sheets to qualify, in lieu of me using tax returns. So I can totally bypass your tax returns, right? I can use these other items to qualify you. Right. You're going to have a higher rate, right? But you're not going to have to pay Uncle Sam 20 and 30 grand, right?
Okay.
It's a lot less
Yeah.
to pay out. So here's how I view this, right? Somebody's going to get paid. Either the bank's going to get paid or Uncle Sam's going to get paid. You pay the bank, it
Hmm.
goes towards that house. You're putting more money down,
Right.
15, 20 down on these programs, 10% sometimes. Um,
Hmm.
so it just depends on how you view that, what you want to do. But for most people, depending upon the purchase price, also where you're at in the country, some people do choose to opt to do their taxes correctly so they can show more income on the taxes, so they can get 3.5% down, 30-year fixed mortgage at market rates. Okay, just depends upon what floats your boat and
Hmm.
what's best for you. If you talk to me about it, we'll go through it, look at the numbers, and see what makes the most sense, and let you come to your conclusion on what's going to be best for you and your family. All right. Now, the last thing that I want to talk about when it comes to income, then we'll go to assets. The last thing I want to discuss when it comes to income is also, I saw a lot of this last year, a lot of this. And once again, it was mostly truck drivers. So there was some other industries too, but for a majority, it was truck drivers. A lot of
Hmm.
people opted to go from W-2 to 1099. Okay.
Okay.
Yeah. So from wage, self-employment,
Hmm.
basically. Right. So
Okay.
if you do that, the thought process behind it is, from what I think, is that hey, I'll have more
Hmm.
write-offs, I'll gross more money, I'm more in control of my tax liability. AKA, you're self-employed is how I'm going to see you. Even though you may work for Burger King, now you're a
Hmm.
contracted employee. Now, for lending guidelines, I'm going to see you as being a self-employed person.
Hmm.
Therefore, let's say I was a Burger King for 15 years. Burger King was
Right.
like, look, we want to take you from being a manager at Burger King to a
Hmm.
regional president of Burger King. We're going to triple your income from 50,000 a year to $200,000 a year, right?
Hmm.
Okay,
Hmm.
that's great. They're like, but we want you to be a contracted employee. We're going to 1099 you. I'm like, whatever, cool. I'll take the money. Let's go, right? Now,
Yeah.
before you can buy a house using standard qualifying situations, I need you to be 2 years self-employed.
Okay.
Yes. So if we have anyone that's thinking about going that route, self-employed, or switching from W-2 to 1099, if that's the case, um, make sure you talk to your loan advisor first before going down that road, please,
Hmm.
because you can
Hmm.
set yourself back another 2, 3 years before you're ready to go again.
Hmm. Okay.
Okay.
Okay. Can I interject real quick on something
Sure.
you said earlier? So
Mhm.
I a thousand a billion percent agree with you as usual. But I wanted to share with you guys that recently, I got a new customer. She's so cool. Her and her husband, new customer, and she called me and said that she received a pretty significant score drop, and didn't she panicked? She's like, I don't know why. And she like just signed up with me. She had the higher credit score and the husband had a lower credit score, but she's now, in credit repair mode and paying attention to her credit more than usual because they're trying to get this house. So I looked at her credit report and I told her that it is her credit cards. And it's just like you said, she has a whole lot of small credit cards,
Mhm.
just credit cards that, aren't important. I asked her where they secured credit cards because I didn't look at her full credit report at that moment. I was looking at like Credit Karma and I was just looking at it real fast. And she was like, I don't know. And I said, well, is it your money or their money? Right. So then
Right.
she said, oh, it's their money. So that's a good thing. It's not a secure credit card, but it's just the fact that she has so many small credit cards and her utilization is high. So I wanted to give a quick tip while we're doing this live. One of the fastest ways to drop your income, I'm sorry, your utilization with your credit cards. If you have a fairly decent credit score, see if you can get an increase in your credit cards, because if you can increase the limit just a little bit, then it drops the utilization without you paying out of pocket for it. So that's a tip right there. But in the meantime, pay down those small credit cards and don't let that hinder you and stop you from having better credit. Okay, I just wanted to kind of throw that in there.
Awesome. Thank you. Yes. And I know that beats up the score pretty bad. That's one of the easiest ways to get your score up too is
Yeah.
getting your revolving balances paid down. There's a question: land and lieu loans. Yeah. So a land and lieu loan, those are, I wouldn't say primarily, but mostly we see those when somebody wants to use the equity and the land that they already have or own to build a new house. So essentially, if you, let's say I own 40 acres, right? And it's free and clear, and that 40 acres is worth $100,000. Just using some round numbers here. Okay. I could use that as equity for the down payment to build my own house.
Mm-hmm.
Right. So let's say the cost for me to build my house is $300,000. Okay. Now on a regular construction loan, the down payment for an FHA construction loan is about 3.5%. It's about 10,500, I think, for 300 grand. Right. So that land that I already own, I wouldn't have to come out of pocket for anything when I go to close on my construction loan. Essentially, that's all that really is, right? So you're taking equity in the land that you own, right? And then you're going and you are using that as a down for your construction home, or also for manufactured homes too. Like you have those dealers in certain parts of the country where they sell manufactured homes, right? On dealers on lots.
Mm-hmm.
That's still what we call a construction loan because we have to construct the pad, and we have to hook up the house to the water, sewer, electric, right? All that requires construction, right? That is for, they do land and lieu for that also. Hope that answers the question. All right. The last piece I want to touch on is assets. Assets, really quick. All right. So assets. So guys, when I talk about assets, I'm meaning mostly liquid. Okay, like money needed for down payment. Okay, cash needed for down payment, or closing costs for the actual transaction too. What's required from you. Okay, now, first things first. If you are a veteran, or if you're looking to buy a home in a rural area, rural meaning outside of city limits. Okay. And it's based upon population count. Okay. You can do 100% financing. All right. There's no down payment on those kind of loans. So VA loans and USDA loans, 100% financing. Okay. Now for FHA and conventional loans, they do have 100% financing on loans too, but it's not 100%. For example, FHA and conventional, they do require a 3% or a 3.5% contribution or obligation. Okay. Now that can be covered a couple of different ways, right? It can be covered by the buyer or through a third party, such as down payment assistance, which is the state, the feds, whoever, right? Now, when it comes to assets, if you're the kind of person that, because we're going to look at your bank statements, right? Don't forget that. We will check it out. We don't care what you're buying, right? We're not looking at your spending habits. And if you're overdrafting, yeah, we're gonna talk about that. We don't want to see any overdrafts. But we look at your deposits and what's coming in, right? Oh, wait, there's a question. Cover down payment and closing costs on the build. Yes, yes, yes. That's correct. Yes, the 100K I was talking about can cover the down. Yes.
I
Excuse me.
I think
All right.
he's asking you to cover that topic, maybe.
Oh, cover that topic. Okay. As soon as I'm done with the assets
Yeah, I
part,
think
I'll
so.
okay. All right. So
Okay.
when it comes to your assets, so we are going to look for the source of your down payment, the source of your cash to close. Okay. So we will dig through your bank statements if you're going to use the money that's in there to put down on the home. Okay. So for example, if you say, Sean, I want to buy a house at $300,000, I'm using FHA and my cash to close is $15,000, all right, including my down payment and closing cost, right? Then you got to show me where 15 grand is at, right? It can't be in your mattress or in your safe, right? I can't, it's not going to work. Okay. I need to see it in an institution. Okay. So you're going to show me a bank statement. Now, that bank statement, here's what I'm going to look for in the bank statement. I'm going to look for repeated repeated line items that are transferred out. Okay. Such as if I see a payment to a certain person or to a certain institution every single month, and I can't match that payment amount to the credit report, I'm going to ask, what is that? What's going on here? Who are you paying? Is that another bill? Is that a car note? What is that? Right? Is it a liability? Does it affect your debt ratio? Right? I'm going to ask those questions. Okay. If I see a deposit coming in every single month, they may not ask about that. Depends upon the underwriter. Right? But if it's a large deposit amount, more than usually 1% of the purchase price, I'm going to ask about it. If I see a deposit over 1% of the purchase price, I'm going to ask about it. So here's a trick, guys. FHA guidelines. I know we have taught the public to not deposit anything to their checking account while the process is ongoing. We've preached that for so long, right? However, you can deposit money into your account while the process is ongoing and before, okay? But the max amount is 1% of the purchase price. That is it. If you're buying a house tomorrow for $300,000 and you have $3,100 that you put into your checking account in cash, one fool, I gotta ask you to source it or I can't use that account anymore. Okay, or I gotta back that. But if you put $2,000 or $3,000 even in there, I'm not gonna ask questions. Okay, 1% of the purchase price is what the max deposit amount can be for unsourceable funds. If somebody gives you a check, excuse me, if somebody gives you a check or a payroll or some other kind of funds come in and you can source where it comes from, fine, deposit it in. Okay, you just gotta source it for us. So in other words, let's say you get, I don't know, let's say you get a tax refund is $5,000. Okay, just for kicks, it's $5,000. Cool. Usually, if it's wired in, it'll say IRS Treasury payment or something along those lines. We're not going to ask questions. They may want to see a copy of your tax return to confirm that, right? But outside of that, as long as it's sometimes wired in, they usually don't ask questions about it. Okay.
Okay.
Because they can see where it comes from exactly. All right. Now, some of us, and I'm sorry, also in the bank statements, if you do have overdrafts on your bank statement, you're gonna have to explain those. And you have to explain why it won't happen again. We do not want to see overdrafts on your checking account statement. So if you're preparing to buy a house, you want to make sure either you have your checking account and your savings accounts linked up to whereas if something does go sideways, the savings account steps in and takes care of the checking account, whatever, right? But we don't want to see anything like that. Remember, we look at the most recent 2 months of bank statements. 2 months. Okay,
Yeah.
so we look at it. All right. Now let's go to gift funds. Gift funds. So let's say we're lucky enough to have mom, dad, brother, sister, cousin, auntie, uncle bless us with the money for the down payment of a home. Okay. And we have to use FHA financing. Remember, if anybody gives you any money for this transaction, I
Mm,
gotta pretty much include them to the transaction to a certain extent. So what I mean is that if if I'm buying a house and me and Tamaya are brother or sister, and I say, T, I need you to slide me $10,000. She's like, I got you, no problem. Okay, I gotta see a copy of
mhm,
Tamaya's bank statement 1 month.
mm,
On that statement, I'm gonna look at
mhm,
transactions. If I see a bunch of um, deposits that are over the amount, I can be questioned about that. So if
mhm.
you have a loved one
Yep.
that's going to be doing this for you, okay, make sure they know that, hey, listen, if you give me a gift, um, you know, they got to see your bank statement. The only way around that would be if let's say we're in May right now, right? Okay,
Mhm. Yeah.
let's say um, tomorrow I'm going to buy a house at the end of August. I need 10 grand.
Mhm.
So Tamaya would give me $10,000 right now. I'll put it in my checking account. By the time August bank statement cut, that deposit
Mhm.
10 grand exists. It's not on there anymore. So I bypassed
Yeah.
all stuff. She's giving me $10,000 for my safekeeping, right? Then
Mm,
I don't have to involve
mm,
Tamaya or source that data. Does that make sense?
mm.
I have
Yeah.
to source my
Yeah.
bank statement, right? So the
Mhm.
same thing goes
Mhm.
if you deposit cash into your checking account, it has to be seasoned for 2 months. So it has to be two banking cycles to whereas we're not seeing that deposit for $10,000.
Mhm.
Once you have bank statements where I don't see that $10,000, you've successfully seasoned your funds, and we won't ask any questions about the balance of your checking account. So if I got
Right. Okay.
$100,000 cash in my mattress, I took that 100 grand in cash to the bank, and I let 2 cycles go by. The bank will not ask you, well, I will not ask you, the lender won't ask you anything about the money that's in your checking account right now. Nothing at all.
Mhm.
Because it's seasoned.
Mhm.
Okay. So if you guys are living like that, you keep boatloads of cash, or you have multiple checking accounts everywhere and you want to put everything into one, you got to season your funds, season your money. Okay. Keep that in
Mhm.
mind. A lot
Mhm.
of us tend to just slap cash last minute and we got to source it. Okay.
I ask, and I got two questions I need to ask.
Of
So,
course.
if I could interject here, thank you. All right. So, what is your stance on individuals that, well, can you touch up on side hustles and how that affects getting a mortgage, especially if they have a history of getting paid like with a regular 9 to 5? And also getting payments from Venmo, Zelle, Cash App. And I asked that question because the banks have changed when it comes to, and loans are different now. Like they're looking at Cash Apps and Zells as personal, not business at all. I mean, does that affect you guys? And my third question, I had a lot of questions. I was listening to you. I'm sorry. But when you were talking about overdrafts, it if I'm using my business checking account, I'm gonna be honest with you. Sometimes there are overdrafts, especially during the time where I might have like a monthly hit. Like I have a monthly bill of 5,000, and it's on an automatic withdrawal. And sometimes they withdraw it, on a weekend or off day, and it just throws everything off. I do fix it every time with the bank. This is an ongoing thing, but does it make a difference that it's a business account? And sometimes this happens from time to time. I'll shut up because I know there's a lot of questions.
Oh no. So essentially, let's discuss side hustles, and then we'll talk about the business situation
Okay.
when
Okay.
it comes to the residential side of buying a mortgage. Okay, let me write
Mhm.
that down. Okay, so let's talk about side hustles. So if I were to consider a side hustle as usable income to buy a house using standard um, Fannie Mae, Freddie Mac, FHA, VA, USDA, right? It's the big four, right? It has to be a registered, licensed business, taxable business. Okay. Can I have LLC set up for it, EIN, whatever the case may be. Taxes filed on that income for me to use it. Okay. If you're I don't know, selling plates out of your house, doing hair and nails, there's no business license. I'm not going to touch it. Okay. And that's once again, that's for a standard. That's for a standard
FHA.
FHA, conventional USDA, VA, right? It doesn't take if you do those kind of things, right? If you do things that are just side hustles, right? It doesn't take much to set up an LLC or a corp or wherever it is. It doesn't take much at all, right? And you should, of course, do that to protect your personal liabilities, right? Corporations are people too, right? It's another person, right? So, excuse me. So if you do it right, yes, I can use that income. Now, second thing on top of that, if I'm using FHA, VA, USDA financing, the big three, right? And you have a regular 9 to 5, right? For me to use your 9 to 5 and your side hustle, you have to be doing both at the same time for 2 years. 2 years.
Okay.
You're going to have 2 jobs at the same time for 2 years. Okay. Otherwise, I can't use it. Now, well, hold on. Let's say I'm bad at trying to give examples. Let's say I work at Sport Clips as a barber, and they pay me a 9 to 5 hourly wage W-2, right? For example, but on the weekends, I got my own barber shop, right? Right, and I've been a skilled barber for 10 years, 5 years, whatever, a long time, right? Been cutting hair and making people look beautiful, right, for a long time. Now, if I had a side hustle for a year and I did conventional financing, Fannie Mae, Freddie Mac financing, not FHA, I could use that income. Okay. Right. But the thing is, on the flip side, I would have to technically, I would still need 2 years of it if I haven't owned the business for more than 5 years. Kind of a catch-22. So with Freddie Mac, you can own a business for more than 5 years. I can use 1 year of tax returns instead of 2, right? Sometimes Fannie Mae too. So side hustles, yes, we have to make sure that I can show history of you having 2 jobs at once to use both incomes. Once again, if that side hustle is a self-employment situation, I can be able to track the income somewhere. Now, the second part of your question, business checking accounts. So, Tamaya, let's say you're buying a house for you to live in. Okay. And I'm using standard one of the big 4 financing, conventional FHA, USDA, VA, 1-4, right? Okay. I don't. If you have a history of having a bunch of overdrafts in your business account, now I'm guessing you got a personal too. I'm assuming you got a personal, right? There's a strong chance you got a personal, right? So what I would do, I would say, I don't want to see your business account. Let me take a look at your personal. Just leave it at that. I would do my best to avoid viewing the business account. Right? Because once I see something, I can't see it. Right? I want to avoid seeing the business account. So I'm going to say, hey, listen, if you got some funny business going on over there in this business account, let's focus on the personal account. As long as you pay your earnest money deposit through your personal and pay for your personal account or personal debit card, not your business, then you're good to go. I don't. So on a regular loan through the big 4, your business bank statements are not relevant to me, unless you decide to intermingle them by paying for your earnest money deposit out of your business account. Now you've broken the veil there. See what I'm saying? You pierced the veil. So now I
Yes.
am
So
statements.
what that's interesting. So like, okay, I'll take myself for example. And I'm not speaking for all entrepreneurs, but maybe new businesses are considered like under 5 years, 3 years. Um,
Mm-hmm.
for the longest, I all my business was done. I only had a business checking account. I did have personals, but then I shut them down because I was funding my whole business from my whole business out of my checking business checking account, and I was living off of the business as well. So it was just easier. Wasn't necessarily smarter per se because there's tax issues and stuff like that. But I mean, even still, those are write offs, so that helps you. But I guess I see what you're saying, but if you eventually I did do personal, but how my personal is set up, and if people are doing things properly to get certain things done, it looks like I'm low income on my personal, but thriving on my business. And I do that intentionally, right?
Mm-hmm.
So does that mean I can't get a house? Because as the owner and CEO of my business, it's thriving, but I'm, technically low income on my personal. Doesn't mean I don't qualify for a high loan.
Excuse me. I'm so sorry. Not at all. Because don't forget,
Okay.
and we're talking about one of the big four loans, right? We don't
Yes.
qualify you on what we see on the bank account. We look at the tax
Uh-huh.
returns, right? Now, once we start
Mhm.
diving into business loans, like for example, or I'm sorry, let's say we dive into the world of the non-qualified mortgage, the NQM loans, right? And
Mhm.
you've
Mhm.
got a metric ton of deposits, $1 million a month coming into your checking account. I want to qualify you on that money. I don't care about your personal checking account at that point. You got to just also you got to
Okay.
show me, right? But remember,
Mhm.
on the big four, the revolving balance of your checking account won't be relevant. That's not what we use to calculate your income. It's going to be purely on tax returns for the big four, right? But once
Okay.
again, on the income side, we look at the bank statements. If you showing that your business is thriving, that's great. We look at the deposits, not the outgo, not the withdrawals. We look at the deposits.
Now, if someone does their files their taxes at the last minute, I mean, does that matter to you, or are you looking at it as long as it's done?
Um, yes, it does matter, but depending upon what year we're talking about,
Ah,
right? So,
okay.
yeah, if
Okay.
someone has filed their taxes, um, what are we in 2024 right now? So this past
Mhm.
tax year,
Mhm.
2023, if you just filed your 2022 taxes in 24, they got to make you wait, I think, 6 months before I can approve you for a loan.
That would be me cuz I
Yeah,
I procrastinate. That's why I have a good tax person. She works for the IRS, okay?
there we
But
go.
I drag my feet. Okay. Okay. I'm asking these questions because I'm preparing myself to purchase within the next year or so, and obviously I'm coming to you, so I want to
Right.
make sure my stuff is together.
Mm-hmm.
Okay,
We'll cross
okay.
that bridge, of course.
I'll make sure my taxes are done by then. Like everything's gonna be straight by then. But it's
Right.
good to know. It's good to know because I know a lot of the things that I go through, other people have gone through or are
Mm-hmm.
currently going through, and they're like, I just don't want it to stop people from applying. So
Right.
I always encourage you guys still go to Sean, apply for a mortgage and see what Sean has to say. Let him do the breakdown. When you guys come to me and or you go to Sean gives you guys a breakdown, a detailed breakdown of what you need in order to get pre-approved. Need as far as your credit repair is concerned, finances are concerned, all of that. So it's good to be prepared. I tell you guys, set up a consultation with me, but not just to fix your credit, to structure a plan. Sometimes you need a plan so we can go down the list, make sure we cross our T's and dot our I's so you have a smooth approval. And that's, I have to do it for myself, as you guys can see. So I appreciate that, Sean.
Of course. Yeah, I love doing that because the biggest thing that I hear out there in these streets is I don't know where to start and I'm scared to talk. I'm afraid to get declined. If you tell me like, hey, Sean, this is where I'm at. We're just gonna talk about it, and I'm not gonna beat you up over it. We're just gonna talk about it. I'm gonna give you a plan and send you on your way.
Mhm.
It's simple as that. It
Mhm.
takes maybe every bit of 15 minutes to find out what the pain points are, and then we'll also look at what it will look like for you once we're done with you. Right? The shiny box, the light at the end of the tunnel. That's what we'll take a look at, and you'll be able to realize that I can achieve this if I do, X, Y, and Z. If I don't do X, Y, and
Mhm.
Z, then I won't achieve this. Right?
Mhm. Now, I do have one last question that might be helpful for the people. Is there a time frame of when someone should or shouldn't apply, or reach out to you and start the home buying process? Is a year too far out? 2 years, 6 months? Because I get a lot of clients that are like, "Yeah, I need my credit fixed. I'm trying to get a house like in 2 months." And to me, I find that to be interesting because first of all, you didn't mess up your credit overnight, right?
Right.
So I tell people at least give me 60 to 90 days to make a difference. Like you already said, your credit report doesn't have to be perfect. Okay, your profile. But even if I were to fix your credit in that short period of time, you still have to go through the home buying process. So, what's too short of a time? And then what's too like when if they're looking to buy a house in 2 years, do they even need to bother to come to you? I'm not sure. And we can make that the last question before
Oh,
we wrap
excuse me.
up.
No, that's a good question. If someone I think 2 years is too far because a lot can happen between that 1 year. A lot can go down. Let's say it takes
Hmm.
Tamaya 3 months, 4 months to fix your credit up, right? So you got a year and a half to chill, right? There's a whole lot goes sideways in that year and a half. A whole
Hmm.
lot, right? I wouldn't want you to put yourself in that position to whereas then you're thinking that uh, you know you're good, and then you call me. I'm like, hey, your credit score is 350, right? Like, what happened? Like, well, something may have popped back up, or something may have new went on there. I don't know, right? You may have forgot to
Right.
pay the bill again. I have no idea. Well, I'll tell you, of course, what I see, but yeah, 2 years is too far, right? A year, I think is comfortable, right?
Mhm.
But if you know you have a bad credit profile, um, no less than 6 months. I think 6 months,
Okay. Okay.
just to give everybody ample
Mhm.
time to do what they have to do to give you time to perform a Christmas miracle. Um, I really think
Yeah.
6 months.
Okay.
Yeah.
Okay. That sounds reasonable. All right. Well, we're pushing on an hour, and I just want to thank everybody that was in and out, flowing, the people that are here, people that are going to check us out in the future. Thank you, Sean, for joining us and blessing us with your presence and answering questions. Real quick for the audience, since this is a weekly thing that Sean is taking the time out to do, if you guys have anything in particular, any topics you want him to discuss, any questions you have, feel free to leave that in the comments. Or if you want to contact us directly, if you look in the description, you see ways to contacting Sean and myself, but let us know. I'm also going to float a poll around for everybody to fill out. Okay. So we know exactly what you need to know about credit and buying a home directly from a mortgage lender. Okay. But in the meantime, I'm going to wrap this up. You guys are great. I appreciate your time. Be sure to like, comment, share, and subscribe. And I wish you the best of luck on your credit journey. Sean?
All right, guys. Thank you so much. Once again, any questions or concerns arise, please feel free to reach out to Maya or myself. We'd love to help you out. Once again, it takes about 15 minutes to find out where you're at with your credit life and mortgage,
Mhm.
right?
All right.